Well, welcome to an extraordinarily special On the Tape. Dan Nathan, Guy Adami, but we're joined by my friend, Dan's friend, and obviously the friend of the entire cryptocurrency community. The CEO of MicroStrategy's, Michael Saylor, is joining us. Michael, thank you so much for being here.
Yeah, thanks for having me, guys.
And we saw Michael earlier in the week, Anthony Scaramucci's book party. You obviously wrote the forward for that. You were funny in your comments saying that, Anthony wrote this book, and I'm using sort of air quotes in writing it. Anthony was part of the book, but he said at the end of it, you should have 1 to 2% of your portfolio in Bitcoin. And after basically, writing this book, he came up with 2%. And you made the point, wait a second, if you're really passionate about this, 2% is sort of a rounding error. So let's start there.
Yeah, well, I think that if you read an entire book of investment advice or financial advice, you don't want someone to end the book saying, I don't have a solution for 98% of your problem, but here's an insurance policy. 1 or 2% is like buying an insurance policy, but 20, 30, 40%, 50%, 75% is like solving the problem. So I just said, like, I don't think you're going to come up with 50 good ideas. And I think that the whole idea of diversification makes sense when you don't know the answer, but you don't want to make a mistake. But I think in the field of engineering and in many fields in life, it's like when your kid is a good basketball player, you don't say, I think you should split your time between archery and jogging and swimming and basketball and football and hockey and 16 other things just in case. You tell them to focus on basketball, and you build the plane out of aluminum, and you don't diversify the steel beam into clay and bronze and balsa wood, right? If there's an answer, there's an answer, and you just tell someone the answer. When you don't know the answer, you're like, yeah, well, go to Vegas and gamble and pick anything, but don't bet more than 2% of your money, right? Don't. So my point really is there's a disconnect between giving someone a piece of advice to make their life better and then saying, but I 98% don't believe in it.
All right. So let's go to the beginning. And Dan mentioned how we met, and I'll let the audience know. So I think you had just sort of come to the realization, you spent some time working on Bitcoin and coming to the conclusion that this made a lot of sense. You joined Morgan Brennan and me. I was able to sort of co-host Power Lunch with her. It was one of your first interviews you did sort of in a meaningful way. And you sort of outlined this vision for MicroStrategy's and what you're going to do. I think it's now 3 or 4 years later. My math is a little squishy, but let's just sort of split hairs a little bit. And that plan is absolutely coming to fruition. As we sit here, you have now over 400,000 Bitcoin on your balance sheet. I want to say at an average cost of about $58,000 or so. You can correct me if I'm wrong, but everything you thought was going to happen is sort of playing out. So let's start there. And, maybe you can talk about some of the things that you didn't see happening, you did see happening, some of the pitfalls along the way. Give us sort of that calendar, that sort of timeline.
Yeah, I think the middle of 2020, we're running a $500 million business with $500 million in cash, generating $75 million in cash flow a year, growing 0 to 5%, competing against Microsoft. Lockdowns hit. Our stock has 0 options, $2 million of liquidity a day. The options are worthless. The stock is worthless. We have no investor interest. We're stuck in a competitive trap. There's no way to crawl out of the competitive trap. We've got 500 million in cash generating 4% interest, and all of a sudden Jerome Powell cranks that down to 0% interest. And then everybody's locked in their home, and I'm staring at, and then I watch all the Magnificent Seven stocks double. And then you realize that if you're sitting there, all your capital is going to be siphoned off by the Magnificent Seven. All your human capital is going to be siphoned off by the Magnificent Seven, right? Even if you have a good product, it won't be a good product in 5 years once all your engineers quit. And so we're kind of stuck in a trap. So at that point, you have 3 choices. You have a fast death, just sell the company. And a lot of people do. 99%. I had 100 competitors, guys. 99 of them, or actually all 100 of them, sold themselves. Right? You just exit, or it's slow death. I have my 500 million. I'm just going to start to pay all my employees massive cash bonuses to not quit, retention bonuses. But you're just going to go through the cash at some point. You're not going to be able to get out of your hole. You're gonna linger on as a zombie, or you take a risk, and the risk is a transformational acquisition. It's like, when you buy VMware, it's like, can you buy a company that's growing 20 to 40% a year, that's a monster world beater company, and can you buy it for cash or buy it for stock, and maybe you have a new lease on life? And so I looked at, option one, I looked at option two, and I thought, well, is there some monster company we can buy with our 500 million in cash? Because right now it's a liability. And obviously I couldn't find one. But then I looked at Bitcoin and I thought, Bitcoin looks like Facebook for money. It looks like the global monetary network. It looks like the dominant. It looks like the Google or the Facebook. And so I'm like, what's the big tech monster network for money? And Bitcoin looked like that for me. So I thought, hey, maybe I can do a $500 million acquisition. I buy 500 million of Bitcoin. What if you could buy a company growing 60% a year at 1 times revenue with cash that you don't need? That was the idea. And it was kind of out of frustration and desperation, but it was a strategic Hail Mary, because your choice is just sell the company, give up. And the company would have been sold for $6 a share in enterprise value. Okay. $6 a share after 30 years of life. So we do that. We get to the 500 million. Bitcoin rallies, the stock doubles, the stock triples. Now we just have an opportunistic run. We discover the convertible bond market, and they want to give us 650 million in cash, pretty much for free.
For free, not pretty much for free, for free.
If I came to you and said, I'll give you $650 million, it's 75 basis points, go invest in something. Can you come up with an idea for something to invest in that yields more than 1%? Probably. If you can't, right, you're not in business, right? Probably you can. So we did that, and Bitcoin rallied again, and all of a sudden we were able to raise $1 billion for zero. Okay. And then we realized, well, we might as well take another 500 million, and we took a $500 million loan at 6%, and we thought, well, Bitcoin's going up 60, we'll borrow at 6, we'll loan at 60, we'll capture 54. And it moved around, and then at some point, some banker called me and said, you can do this ATM where you can actually sell equity in the market. I said, you're kidding me, really? That's possible? And actually, the greatest innovation of the past 30 years, guys, in the capital markets is the ATM shelf registration of equity, because it allows an issuer to sell shares pari passu to an investor. You're basically on the same footing as anybody else. It's a fair thing. And for my entire career, if we wanted to sell $100 million of equity, our stock would get hammered down 20%. And so it felt pretty good to not get hammered 20% and be able to sell into the market whenever you want. And so now we hit upon this new stage where we realize we have a commodity that returns more than the S&P index, that we can buy by selling our stock. So if you're an investor and I give you a return higher than the S&P, how much capital are you going to give me? Infinite. So we started doing that, and we sold $1 billion of that. And the short of it is, we went from a $500 million investment to $10 billion of capital raise, and the stock, went up by a factor of 10 or 20. And then we got to 2024, and 2024 was by the way, I skipped the crypto winter where everything crashes from 66,000 to 16,000, but this is a half-hour podcast. So I'll just say it was a roller coaster. We went up to 66, down to 40, up to 66, down to 16, back. But, and that's all very colorful. But the real point is, we're buying Bitcoin with equity, with debt. We're refinancing the debt. We're at all points, generally, we're doing it in an accretive way. And we get to 2024, and Then we discovered the value of volatility. I mean, really understand it. Because in January of 2024, Bitcoin isn't an asset class. And the second week, the SEC approves those ETFs. And then you start having the snide comments like, well, now we don't need MicroStrategy anymore. They're like just a proxy. They're like a clumsy ETF substitute. We'll just put our money into the ETFs. But what happened at the same time was the halving was coming, and all of the investors, the vol traders, went through a secular rotation and they started selling the Bitcoin mining stocks and looking for something else to trade. So if you track the liquidity in the options market and in the equity market, there was a major shift in Q1 and early Q2 where a lot of the volatility in the options traders and equity traders, they basically hopped off a dozen Bitcoin mining companies onto MicroStrategy because the Bitcoin miners were going to the halving where their revenues get cut in half. So when that happened, our options interest exploded and we became the number one options market. When the SEC approved the ETFs, they didn't approve options. Okay, so uh, today our options market is like $95 billion. Our options market is the same size as our market cap. And then we discovered that the real strategic opportunity we had was we can construct a balance sheet of permanent capital with leverage. And when you take Bitcoin and make it 100% of your stock, you're going to trade probably if Bitcoin is trading with a 60 vol, you're going to trade with a 75 vol just because of the uncertainty of what the management team is going to do. Like I have the option to sell equity or not sell equity, or we might do something or not do something. I have the option to do debt or not do debt. That option is going to move you from 60 vol to 70 or 80 vol. Then if you actually execute the option by selling equity at a premium or by issuing convertible bonds, you move to 90 or 100 vol. So all of a sudden, we had an equity trading with 100. I think today it's like 120 vol, basically double Bitcoin equity. And now here's the big idea, right? The S&P is 15 ARR, 15 vol. Bitcoin is 60 ARR, 60 vol. It has been that way for 4 years. We take a company with permanent capital and we create something which is 100 or 120 vol, 100 to 120 ARR. Okay, now that attracts all the options traders, all the arbitrageurs, all the Bitcoin maximalists. It becomes hot money. You know, the call rate, if you hold a dollar bill for 30 days, you're getting SOFR at 30, you're getting 480 basis points or something like that. If you hold $1 million worth of the S&P index for 30 days, you can get like 15% interest by selling the 30-day calls at the market. If you hold Bitcoin, IBIT, for 30 days, you couldn't sell the options until just recently, but now you can sell them and generate about 100% interest. If you sell the MicroStrategy call option at the market, it's 220% interest rate. Okay, just to hold the share. And so all of a sudden, what we've done is we've created a levered flywheel on top of a product which is already 4x as volatile and 4x as performant as the S&P. The result is our liquidity explodes, our options interest explode, and we do a convert bond in Q1. A week later, we do another convert bond. That's the first time in history anybody ever did 2 convert bonds back to back, 2 consecutive weeks. Then we do another one in Q2. Then we do another one in Q3. Then we do $1 billion of ATM in Q3. And then we start to get into a groove and we realize that at the end of the day, the market's going to rally around some leader. And you're either going to lead in a decisive way or you're going to sneak around and apologetically be opportunistic, or you're going to hide and wait. And so we just decided we're going to lead. I mean, John D. Rockefeller decided to roll up the entire petrochemical industry, and he bought out all of his competitors, all of his customers, all of his vendors. And first he did it for cash, and they would say, okay, well, pay me this. He'd go to the bank, he'd borrow the money, and he'd give him the cash. And at some point, people in the industry said, Standard Oil stock is worth more money than the cash. And he just started issuing the stock. And Henry Flagler, of course, built Florida with Standard Oil stock. And so there's this point in the market where the market decides it trusts you and it wants to rally behind you. And we got to the point in October 30th, and we just said, look, we're going to put the question to our shareholders. Do you want us to basically build this business or not? And after 40 consecutive Bitcoin purchases, after laying the foundation of a Bitcoin, development company, after actually rolling out the KPI of BTC yield, which is, we just sold $1 billion of equity. It was backed by 350 million in Bitcoin. We bought back the $1 billion in Bitcoin. We captured 650 million of the arbitrage. That works out to 4%. That 4% is like a Bitcoin dividend to the shareholders, but we're going to keep it on the balance sheet, roll it forward, and reinvest it. Once we constructed that model, we just said, look, we're going to issue $21 billion of equity, and we're going to issue $21 billion of fixed income, whether it's convertible bonds or preferred shares or corporate bonds. And we're going to do the fixed income to stay levered. We're going to do the equity when it's at a massive premium to the underlying assets to capture the yield and to delever. If you want to get behind us on that, that's the plan. We put it out there. The next day, stock trades up. We outperform every Magnificent Seven company. We outperform Bitcoin. We outperform every Bitcoin company. Yeah, so the shareholders spoke. I mean, by the way, it's not a surprise to me. I was 95% certain they would like it because I meet with them and they were like, this is the most brilliant thing ever. Yeah, just keep doing this. So after that, we had a good week, and then November 5th came, and there's a red sweep, and all of a sudden you have a pro-Bitcoin White House, a pro-Bitcoin Senate, a pro-Bitcoin Congress, pro-Bitcoin cabinet. Bitcoin rages from 68,000 to 99,000. The short of it is we raised $10 billion in 4 years after our initial announcement. And that's like progressively work and learning. We're learning, and the market's learning to trust us, right? We're building a relationship. My relationship's not just with my equity investors. It's with the convertible bond investors. You meet with a convertible bond investor, say, I saw you last quarter. I saw you, you yelled at me for this and this. I fixed this. I'll do this. We're partners together. I promise you I will do this. I'm not going to mess with your opportunity. I'm not going to hedge it. I'm not going to steal your trading opportunity. I will do this and this and this. The guy goes, well, and I'm looking forward to this future. The guy goes, thank you for your candor. $500 million order. 50. Like, if you have trust and people understand you, they'll give you your money. So what happened next is we raised $13.5 billion in 4 weeks. And if you look at my tweet, my tweet this morning is basically, we generated about a $9 billion plus gain for our shareholders in those 4 weeks. We're making hundreds of millions of dollars a day. It's tricky for conventional investors to understand it because you're not capturing shareholder value creation via GAAP accounting because for 2 reasons. One, Bitcoin's indefinite intangible, but 2, in the history of 50 years of the capital markets, everybody's been on the US dollar standard, which is 0 vol, 0 ARR against the dollar. And this is the Bitcoin standard, 60 vol, 60 ARR against the dollar. We don't have the math, the accounting to keep up with that in the traditional system. And that's why we have to put forward things like a BTC yield, a BTC spread, a BTC gain. And those that understand BTC, they get it and they're long and they love it. And those that don't understand BTC or don't understand this or just aren't really interested in putting in the work, they just think it's sham crazy and they're just going to short it or they're just going to whatever. So that's where we are today, is from desperation to opportunistic to strategic to identity. At this point, we're a Bitcoin treasury company. I'm on a mission. My mission is I'd like to see the entire world recapitalize on Bitcoin. Every company, every family, every individual, every government. I think it's an economic protocol for prosperity. I think it's as important as English or fire or electricity or steel. I just think it's good technology. It's a good idea. we're reaching the fun stage. The next 4 years, I think, are kind of fun. We get to do a lot of interesting things to help people.
Michael, it's interesting. And Guy and I said this on Fast Money earlier in the week also. I've been in the business for 26, 27 years. I've never seen anyone take the sort of time to explain what they're doing, which seems somewhat non-traditional if you're speaking to an equity investor, which you were back in 2022 when you were on our podcast then. You basically said some of the same exact things that you just ended that commentary with, of like what you'd like to see, companies do, what you'd like to see households do. And I guess if they listened to you back then, the outperformance relative to, let's say, the Mag 7, which you just described, would have been pretty astounding. Now, you also use the term traditional investors. When I look at the holders of MicroStrategy stock outside of you at almost 9.5%, I see Capital Group, Vanguard, Morgan Stanley, Jane Street, BlackRock, and State Street. Now, those 6 or 7 investors are usually the largest investors in most of the S&P 100. We can agree on that, right? So when you are speaking to them about what you just described to us, what do they think the end game is, right? Because a lot of investors have exposure to this who don't really understand everything that you just talked about. So what is the end game? When you listen to an Apple or a Microsoft or any of the Mag 7, they're laying out a 10-year plan, how they're investing their capital, where they see, their business going or the macro going. So what do you say to investors about what the end game is? You just described what your plan is right now.
Yeah, I think the end game is to securitize the entire asset class, securitize the asset class, and so when we say we're a treasury company, what we mean is we're the institutional bridge between a high energy, volatile crypto commodity, that thing we call Bitcoin, with 60 AR, 60 volatility. What that means is it's it's always going to be higher performance than the S&P index. It's always going to be more volatile than the S&P index. As it goes from a trillion to 250 trillion, as it merges, the S&P will adopt Bitcoin and their performance will drift toward it, and Bitcoin's performance will drift toward the S&P. But as long as we're sitting between conventional equity capital and this crypto capital, we can arbitrage the difference. And as long as we're sitting between, by the way, 60 ARR, 60 vol, and the bond market is 6 ARR, 6 vol, 5, 5. So you have fixed income, which is 5, 5. You have equity, which is 15, 15, and the traditional market. You have this raw energy source, which is 60, 60 in the crypto economy, which is 24/7, 365. No one can stop it. Chinese, Russians, Africans, South Americans, people can panic sell 10 billion of it on Saturday night through one of the 14,000th exchange in the world, or 1400. So you've got this raw thing, and then you've got this traditional market. And what we've said to our investors, and I think they're starting to understand now, is so we're going to strip the volatility, strip the performance, strip the risk off of the bottom of the capital structure, give you like a 6 to 12% investment grade instrument to invest in, a 12 to 24% high yield instrument to invest in, a convertible investment that gives you 75% of the upside to 100% of the upside, but 10% of the downside. And then when we strip those performances and those vols via those fixed income instruments, you're talking like, say you raise 100 billion in capital. Well, you're grabbing 60 to 65% of the economic boost for the equity, for the MSTR equity. So when I sell 100 billion of fixed income, I'm going to tax $60 billion of boost onto 40 billion of equity on the MSTR side. That's how we get to 2x Bitcoin or 2.5 or 3. And of course, the real magic of the story is the baseline is Bitcoin is raw commodity. You either buy that on Coinbase, or Bitcoin is wrapped. You buy IBIT from BlackRock. That's the baseline. But it turns out most of the world doesn't want that. I mean, a lot of the world wants high voltage. They want 10x leverage. Susquehanna wants 10x leverage. Millennium, Soros, they want to be up there in the stratosphere. And then some people want, the MSTX, MSTU, those two ETFs raised $4 billion in a matter of weeks, no marketing. They want 4x, 3x Bitcoin. MicroStrategy is 1.5 to 2x Bitcoin. So some people want to be up there above the baseline. Look, if you believe in Bitcoin and someone can give you 2x Bitcoin and they can do it with intelligent leverage or with a balance sheet you trust, why wouldn't you want 2 times whatever you wanted, right? And then there's another world of crypto curious people. They're just tired and bored. How do you feel about a portfolio of 187 diversified preferred stocks that give you 520 basis points? And it's like, okay, you own the 16th tranche of the 18,000th regional bank, and it's like QSIP 199742. There's no volatility. You can't pledge it as collateral. You can't borrow against it. So there's a world, $300 trillion of bored money that's waiting to die, getting 2-3%. And then there's another 200 trillion of hot money. MicroStrategy is just going to sell all of those instruments up and down the chain while we ignore the baseline. And I'll just make this one point. Like when you're arbitraging this, you're asking the question, well, how fast is it appreciating? So Bitcoin is plus 60. And let's just say because it's plus 30 to 60 versus the US dollar. And my long-term forecast is 29% for 21 years. So we're plus 30 to 60. Then the next question is, how volatile is it versus the dollar? Bitcoin's 60 volatile, but you can imagine it's going to be plus 30 to 60 more volatile. Then you ask the question, how fast is the investment cycle? If I borrow a billion or raise $1 billion of equity and I invest it in a real estate project, it takes 5 years, 1,500 days. If I invest it in Bitcoin, it takes 1 day. I'm running the investment cycle 1,000 times faster. And then the last question is, how accretive is the capital raise? So if I'm selling it at 3 times net asset value, you're capturing a 66% spread. The convertible bonds are capturing an 80% spread. When you sell a convert at an 80% spread, and you do $1 billion of it, it literally means that you captured 80%, $800 million of capital gain on the day you did it. And you capture all of the capital gain for your shareholders forever on the 800 million. And so when you're raising 800 million and then you're investing it at 60% ARR or 30%, right? The amount of accretion is screaming. So what are we going to do? Well, we're going to do this $42 billion and then rinse and repeat and double it and double it and double it and double it. And you're going to say like, well, where does it end? Well, I guess when we've taken 1% of the fixed income market, which is $3 trillion, and when we levered it up and we've got 10 billion, we bought 3 trillion of Bitcoin and we're trading at $10 trillion in market cap, we'll be growing 20% a year.
All right. So
that's the end game, right?
So here's my question to you. So, gold is an extraordinarily mature market, and I'm going to round up here. So gold right now is an 18 trillion market cap industry asset, whatever you want to call it. Bitcoin today is about 2 trillion. So that's 11%. Where should that ratio be? And then by giving us that ratio, we can back into a Bitcoin price.
Oh, look, Bitcoin's going to go to 10x gold easy. Just keep in mind, right? A public company, it's got to hold a commodity on its balance sheet because it can't hold securities. So you've either got a choice of a digital commodity called Bitcoin, which is 60% ARR. Gold is 7%. Real estate is 10%. Bonds are 4%. And everything less than 15% doesn't beat the cost of capital. So the S&P sets the hurdle. So gold fails as a treasury asset for everybody in the world. Bitcoin succeeds. I think you could, if you call Bitcoin digital gold, it's 10x gold. But I still think it undersells Bitcoin, right? Because Bitcoin is digital capital. it's not just replacing gold. It's going to replace real estate, the S&P index, and any capital asset held by an institution or a wealthy family. So right now, wealthy families and investors don't use bonds or gold as a capital asset. They would use the S&P index or stocks as a capital asset. But banks and regulated corporations, operating companies, aren't allowed to use securities as a capital asset. They're knocked down. They don't want to use gold. It's not liquid enough and fungible. It's not liquid enough. And so they use real estate, and you got a REIT or a real estate development company, but the real estate is, less than the S&P index and not volatile. If you give up the ARR and the volatility of the S&P, you're trading down. So that's not really a winner. And then you're stuck with bonds, and bonds are dead money, a liability. So yeah, I think I've said before, Bitcoin, it should reasonably become a multi-hundred trillion dollar asset class, right? My forecast is 13 million a coin by 2045, base case, upside and downside. I just expect another way to say it is it's 60% ARR and 60 vol. It's going to track toward 20% ARR and 20 vol when S&P is 15 over 20 years. It'll just step down as it approaches that target.
Okay, so here you go. So this is my final question, I promise. So let's just say President-elect Trump and his cabinet members and the Treasury Secretary all listening to this podcast. They just heard what Michael Saylor said. This is going to come completely out of left field. But what if they say, wait a second, this is basically property. What if they say the 400,000 Bitcoin on your balance sheet, eminent domain, Michael Saylor, the best interest of the United States for us to have them? Is that an existential risk? I mean, it's happened before. Thoughts on that?
In a communist or socialist state in Venezuela and North Korea and Cuba, they expropriate property. So if a government becomes communist or socialist, then they're going to take your property, I suppose. So it's an existential threat. But what I would say to them is the smart thing to do is think about money as bifurcated into currency and capital. And the US dollar is destined to be the world's reserve currency. And the smart thing to do is just normalize stable coins or digital currency and let banks and corporations issue US dollar stable coin like Tether. And then that market will go from 150 billion to 10 trillion. And the US dollar will become the medium of exchange in North Korea, South Korea, Cuba, China, Russia, Africa, South America, and probably most of Europe. Literally, if you want the dollar to become the world reserve currency and move between 8 billion people the speed of light on Android phones, it's easy to do. Just normalize a digital currency with a digital assets framework. You will have $10 trillion of demand for treasury bills to back it. And then I would say, acknowledge that the world capital network right now is real estate and equity. And if you talk to any billionaire, no one is bragging about holding all of their wealth in cash or bonds. It's real estate, it's equity. And Bitcoin is the emerging world reserve capital network. The most intelligent thing you can do is just sell the gold, buy Bitcoin. It's a free trade. Gold was a good idea in the 19th century. No one thinks gold is going to be the capital network of the 21st century. So just trade the gold for Bitcoin. You'll have 25% of the Bitcoin network. You'll make $100 trillion on the trade. If you don't want to trade the gold, just issue currency. It's a little bit of money. It's free. Print money. Buy 25% of the Bitcoin network. When the Chinese billionaires, the Russian billionaires, the Europeans, when they all basically start buying Bitcoin, the big winner will be the United States. It's not more complicated than you can have Louisiana, California, and Alaska for free by writing a little paper check, or sell the past, sell the stupid gold. Gold is going to, by the way, gold is going the way of silver, which went the way of glass beads, which will go the way of copper tokens, which goes the way of the giant stone coin of the Yap people. It's going to be demonetized because you can't zap $1 billion of gold from an Android phone to an iPhone in one split second. It's not complicated. Everybody's going to figure it out. So I'm willing to accept the existential risk of the expropriation of my property if the United States goes full on communist. But you can expect that I will agitate in favor of capitalism between now and then. And I'm an optimist. So I don't dismiss the presence of evil in the world. You see North Korea, you see Cuba, you see Venezuela. There is evil. It did happen. I just happen to believe that at the end of the day, Bitcoin is a force of good, and it's going to bring people back from the brink, and it's going to remind them that maybe they should embrace technology and freedom and capitalism and property rights and all of those things that made America great.
All right, Michael, one last one here. I suspect you're a sci-fi guy. So here's the deal. If we reach artificial general intelligence, the AGI, which I think a lot of folks who are in the Bitcoin think we might do sooner than later, don't the machines take the Bitcoin right out of the gate?
They won't take it. They will adopt it, right? You're going to have billions of AIs and they can't get bank accounts, right? And by the way, the AIs are smarter than us. And so if you were an AI, you wouldn't invest in gold or silver or glass beads or copper tokens, and you wouldn't buy securities and you wouldn't buy real estate, right? For not because it's hard to buy it, but by the way, it is hard to buy it. They'll be blocked from the 20th century economy. No one's going to sell the AI the house, and they can't trade bonds, right? So they'll be blocked from the 20th century economy. But the truth is, they'll look at it and they'll go, well, don't we want to actually grab billions of dollars of stuff that's going to, I'm going to grab 5 or 10% of all the money in the world forever that moves at the speed of light, that's in cyberspace, that no one could steal from me. Why wouldn't you? I mean, I think they're smarter than us and they're faster than us. So yeah, Bitcoin will be the reserve currency of cyberspace, or let me restate that before I get myself in trouble. It's the reserve capital of cyberspace if you're going to store your capital asset. And as the AIs accumulate it, they're just going to drive the price through the roof. And so if you're a person, the smart thing to do is front run the AIs. They're not going to steal it from you. They can't steal it. They're just going to trade you pesos and rubles and real estate or whatever else services you want for your Bitcoin, and they're going to keep it because why wouldn't you? It's the smart thing to do.
Michael Saylor, the Executive Chairman of MicroStrategy's, a visionary, clearly, and somebody, as you know, you think about steadfast people that have had their beliefs. You know, you mentioned Rockefeller. I mean, there will be books written about you being this century's Rockefeller. So, Michael Saylor, your time is valuable. We appreciate it. Thank you so much for joining us on the tape.
Thanks for having me, guys. Always a
Michael.
pleasure.